The markets start off with a lot more of a bullish feeling this week. Outside equities were sharply higher, with Dow futures in the afternoon trade touching over 1,000 points higher several times. This all comes on renewed optimism for the U.S. economy starting to come back on limited reopenings across the country, sending back positive reports. Now, with those positive reports, we finally started to put some pressure on the U.S. dollar. It broke below 100, and with that break, that gave a lot of optimism to the commodities, which we saw West Texas Intermediary June crude oil futures jump to the $32, almost $33 per barrel mark. Interesting enough, today is the first notice day for those June West Texas Intermediary crude oil futures. With that, a month ago, when the May contract went on its first notice day, that's when we started to see that negative price action. Amazing just the difference 1 month can make. Now, in the grain trade, that was mostly mixed on the day. Soybeans, the only grain really finding solid follow-through buying throughout the entire day. That comes on renewed hopes that China will be once again a big buyer, as Chinese state media has relayed that grain and commodity trading firms in China have been instructed to continue their buying, or actually even increasing their buying of U.S. ag goods, including grains and meats. Now, we did get out the latest USDA export inspections out today. That was pretty solid for corn, back over 1 million metric tons this week, although we did see, when you look at the year-to-year data, actually corn's lagging quite a bit behind last year. Soybeans were the only one to take a dip week to week. Sorghum had the biggest jump percentage-wise, and wheat was relatively unchanged, but slightly higher than the previous week. We'll see December new crop corn futures settle 332 3/4. November new crop soybeans settle 852 3/4, while July Chicago wheat will settle 497 even, and July Kansas City wheat will settle 446 1/4. In the livestock trade, it was mostly in the green until the settlements. That's where we saw the front 2-month lean hog contracts actually dip just a little bit into the red. Last week saw really strong cash cattle out in the country. That helped to find follow-through buyers here to start off the week. Once again, triple-digit gains. June live cattle actually briefly touched $1. Now, with that, we're starting to see slaughter rates come back ever so slightly, getting closer to those pre-COVID-19 levels. That's starting to put pressure on those carcass cutouts, taking a significant drop here at the midday. June live cattle will settle $98.72. August feeder cattle will settle $1.3255, and June lean hogs will settle $57.65. That is a check here of your closing markets on this Monday, May the 18th. I'm Clay Patton. Have a great afternoon. We'll be back with more information and the latest in crop progress data tomorrow.